Okie dokie. Yeah, I think that's better now. I think it was working. At last is working. Okie dokie, everyone. Let's get started. Can I start off by saying either a very good morning or good afternoon or even a good evening, depending on where you are around the world. And thank you for joining me tonight on tonight's latest episode of how I understood or how I got to understand trading for Stratton markets. A little sip of my coffee. Tonight's episode is called How I Came to Understand the Different Chart Types. Written by myself, of course, which is James Trescothick, and I'm the Chief Trading Educator here at Stratton Markets. Now, before we get on to a little introduction on myself and indeed tonight's agenda, I will be talking obviously about online trading and CFD trading, and like with all types of investments, it does indeed carry a great deal of risk. So I do suggest you do your own research and your own due diligence and know the risks at hand before entering any trade. With that out of the way, you will see me in a little while. I'll put myself on webcam, but for this point being, here I am with my dad bod, so to speak. This hairy, wrinkly individual is myself. Like I said, my name is James Trescothick, and I'm the Chief Trading Educator here at Stratton Markets. I have over 20 years experience in the financial service industry. I actually started off as a mortgage broker, where I specialized in buy-to-let and commercial mortgages before moving into pensions and alternative investments. I got into trading around about 13 to 14 years ago. I've traded, obviously, for several prop companies, ran a floor at a Philippine stock exchange, traded gold options with the Buy Gold and Commodity Exchange, etc. And before I moved into portfolio management. I'm a published writer and been published in several leading industry publications, including the likes of the Financial Times Advisor, Market Watch, which is the Wall Street Journal, and several other leading industry magazines and publications. I'm an avid market commentator. I'm very passionate about this marketplace, very passionate indeed. I'm a passionate individual. And I'm a well-known public speaker, and I've spoken around several events around the world, including the likes of Singapore, Hong Kong, Dubai, Kuwait, Qatar, South Africa, Joburg, Pretoria, Cape Town, Durban, London, obviously. As you can tell, I'm a Brit. Don't hold that against me. Berlin, just to name just a few off the top of my head. Now, tonight's agenda, like I say, is an introduction to the different types of charts. So I will give you an introduction into the different chart types. Then I'll discuss the three most popular chart types, certainly when it comes to Forex trading. Then I'll discuss understanding how to read them, what they mean, what they represent. Then I'll move into an introduction. I'll do another episode a bit more in depth about this, but an introduction to candlestick patterns, followed by future educational events, and then, of course, my usual question and answer session, which will be at the end. So, I'll put myself on webcam in a minute so you can see my gorgeous looks, not certain types of charts which are used. First of all, of course, we have something like the dot, which focuses on the closing price only of an asset. Then we have the area, which again is similar to a line chart, but it also shows you the density of volumes traded. Then we have the line chart. Then we'll have the bar chart. And then we have the very famous, well-known candlestick chart. Now, the three most popular charts used in trading, certainly on the retail market, includes the following: line, bar, and candlestick. Now, let's see if I can get the webcam going now. That's the candlestick. Can you see me? Don't know how big am I. Can you see me okay? Michelle, can you see me? Hopefully I'm not too taking over the screen. Anyway, I'm here. Hopefully you can see me okay. Anyway, line charts are the very basic form of charts, as it only shows the closing price of an asset. The chart is created by connecting the closing price of an asset over set periods of time. Now, it's very simple, it's very basic, but some traders, they consider the closing price more important than anything else. So some traders prefer line charts because it cuts out an awful lot of the noise, in their opinion. It cuts out an awful lot of the traffic, and instead sort of focuses mainly on the closing price, which some traders believe can potentially help them identify a trend, or they feel it's easier to identify an overall trend. Now, you see this a lot on Bloomberg when they're talking about long-term trends. So line charts are favored for maybe more position traders, etc., because it focuses on giving you maybe a basic pattern of where an overall trend is developing. Excuse me. Excuse me. Then you have the bar chart. And bar charts, they add a lot more data on the asset than the line chart. Because a bar chart includes the open, the high, the low, and the close of an asset over a set period of time. This is represented by a series of lines, which I will go over with you now. This is what it looks like. Open, close, high, low. Open, close, high, low. Now, in this illustration, okay, you can tend to say, again, you can set the colors on your chart, depending on what you feel. The green color bar represents if the asset closed higher during that period of time. Remember, depending on how we set the time period on our charts, from, like I say, 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, monthly, whatever. Each illustration represents a unit of time. Okay, so say for point of purpose of just talking about this, say we set a 30-minute on our chart, the green color bar would represent 30 minutes. Okay, and the red would represent 30 minutes. Now, like I say, the point of purpose of this, the green bar, say we chose 30 minutes, would be green bar represent it closed higher in 30 minutes. The red bar, the red bar will represent it closed lower in 30 minutes. But it's giving us a lot more information than just simply giving us the colors of a high or low in that period of time. The little horizontal line on the left shows where the asset opened. And the little horizontal line on the right represents where the asset closed. And the top of the line represents where it closed high, or the highest it got to, not closed, highest level it got to in that period of time. And the bottom of the line represents the low, or where that asset went to in that period of time. Let's go in a little bit more detail on that, James, shall we? Let me grab my little laser pen here. Okay, so if we saw a green bar, that meant in that unit of time, the asset had closed higher. This is where the asset had opened. This is where the asset had closed. This was the high the asset went to in that 30 minutes of time, if we're saying we're choosing 30 minutes as the period of time. And this is the low of where the asset went to in that period of time. If it was red, for this illustration purposes, it meant the asset closed lower in that period of time. This is where the asset opened in that period of time. This is where the asset closed at that period of time. This was the high the asset went to in that period of time, and this is the close of where the asset went to in that period of time. So again, like I say, unlike the line chart, which basically focuses on the close of the asset over a period of time, the bar chart gives us an awful lot more information of what that asset did during that period of time, which moves us on to probably the most popular chart for that traders tend to use, certainly in Forex, and that is, of course, the candlestick chart, or the Japanese candlestick chart, whatever you want to call it. Candlestick charts, again, show us the same price data, realistically, that a bar chart shows us. However, some traders prefer candlestick charts as really they're more attractive to look at. Let's be fair, they're more attractive. But they also believe that with candlestick charts, they could possibly give us some patterns or help us identify some patterns which may indicate where an asset may move next. And I will divulge and go into more information on that. I mean, this is what a candlestick chart or what candlesticks look like or what they represent. Again, same as the bar, it represents a movement in the price of an asset in pretty much more a visual form than, say, a bar chart. Again, depending on your selected time period, each candle represents a unit of time. So say we choose 30 minutes, this would represent 30 minutes, and this would represent 30 minutes. Now, in this illustration, which is the most popular way of doing it, the green candle shows the asset close higher at the end of that unit of time, and the red candle shows that the asset closed lower in that unit of time. But this is how you read it. This part here is called the body. Okay, these big blocks are called the body of the candle. These lines here are called wicks or candlestick wicks. This is what it represents. If we're looking at a green candle, as in the asset closed higher, the bottom of the body is where the asset opened. The top of the body is where the asset closed. And the same with a red. The top of the body is where the asset opened. The bottom of the body is where the asset closed. And the long lines, the wicks, that represents the high the asset went to in that unit of time on both either red or green. And the wick at the bottom on both represents the low where that asset went to that in that unit of time. Now, again, not advice. You need to find your own way, your own direction, your own way of what you're more comfortable with. But there is some advantages. Some traders believe to using candlestick charts over, like I say, line or bar chart. And this includes the following. Candlesticks, because they're visually more stimulating, can be easier to read. Okay, and you can really interpret, easy for me to say, interpret more information more quickly because they are more visually attractive. Candlesticks can also, as we mentioned in the previous 2 slides ago, can form potential patterns, which traders believe can help identify if the market is possibly changing direction and look for possible trading opportunities. Now here's some examples, and I'll go through a few examples, okay? And I will do a whole episode on candlestick patterns. This is just an introduction, okay? There are some examples of some of the candlestick patterns which are quite popular. You have the hammer or inverted hammer. You have the shooting star, bullish engulfing candle, the bearish engulfing candle, and 3 white soldiers or green soldiers in the case of the illustrations we're using. Now this is the hammer or inverted hammer. Okay, a hammer is known as a bullish reversal pattern. Traders look for these because they believe it indicates an end of a downtrend. And it looks a little bit like this. You have a small square body with a long wick at the bottom. Okay, an inverted hammer also has the potential of indicating an end of a downtrend, and it looks a little bit like this. Again, a square body, but this time the wick is above it, so it's an upside down hammer. Now, I guess I go back to this. What's important about this pattern? Because there's another pattern which looks identical to this. Okay, that's called the shooting star, which I'll talk about in a moment. What's important about this? This pattern, or this candlestick pattern, has to form at an end of a downtrend. If you see it when the market is ranging, it is not a hammer or inverted hammer. It has to come near an end of a downtrend. And let me give you an example. Here we have the euro-dollar on 30-minute. Okay, downtrend, 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 inverted hammer, and a change in direction in the market. So remember, this has to happen at an end of a downtrend. If it happens at the top, then it's a total different symbol, different pattern. If it happens in a ranging market, it's not. So it has to be a clear downtrend for it to be inverted hammer or a hammer. Again, here, downtrend, 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 hammer sign, market retraces back up. Again, downtrend, 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 hammer again, market changes direction. Then you have, again, you have an inverted hammer, downtrend, downtrend, and then the market changes direction. Here's another pattern. This is the shooting star. Now, it looks like the hammer and the inverted hammer, pretty much identical to it. But this time, this pattern has to form at the top of an uptrend. Looks identical. Body, small square body, long wick above it. Doesn't matter if there's a shorter wick below it, but it has to be a long wick above it. And like I say, this has to appear at the top of an uptrend because this potentially indicates a reversal of that uptrend. Here we have, this is the euro sterling on a daily, uptrend, 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 inverted, well, shooting star. And then what happens? The market reverses and goes on a downtrend. Here's another one. This one's called engulfing bearish candle. Okay. The bullish, sorry, let's get bearish. Bullish, sorry, the bullish engulfing candlestick pattern. The bullish engulfing candlestick pattern, this again potentially indicates a reversal in a downtrend. Okay, reversal in a downtrend. If the bearish candle, i.e. the red one, is totally engulfed, as in it's totally covered, as in far bigger in size by a bullish candle, then it indicates that the market might be changing direction. And here's an example we have here. Again, this has to happen at the end of a downtrend. You have a downtrend here. This is the British pound, US dollar, the cable on the daily. Downtrend, downtrend, downtrend. We have a bearish candle, then totally engulfed by a bullish candle. Sorry. And the market indeed changes direction on an uptrend. Here's another one. This is again the opposite. This is the engulfing bearish candle. Totally the opposite. Okay. Again, you have a small bullish candle, which is then totally engulfed by a bearish candle. Again, this has to appear at the end of an uptrend. And when it's ranging, uptrend. Okay, it's all about the uptrend on this one. And if you can possibly identify that, or identify this, then again, it indicates indeed that maybe the market is indeed changing direction. And here's an example, and this is a few examples I have here. This is a dollar CAD on 1 hour, uptrend, bullish candle totally engulfed by a bearish candle, changes direction. Uptrend, bullish candle totally engulfed by a bearish candle, changes direction. Uptrend, bullish candle again totally engulfed by a bearish candle, bearish engulfing candle, downtrend, and again here we see again a slight uptrend, totally engulfed, and indeed it goes on a downtrend. Three white soldiers, or you can call them green soldiers because I use green on my candlesticks for a bearish candle, bullish candles, red for bullish. This is again a bullish candlestick pattern, and traders look for them to try and identify a reversal of a downtrend. Looks like this. There are three long body candles that open and close above the high of the previous candle, like an uptrend. Lower, higher open, higher close. So it's like an uptrend. Again, this has to appear at the end of a downtrend. So it looks a little bit like this. We got again the British pound on the daily, downtrend, downtrend, downtrend. And here we go. 1, 2, 3. Opened here, opened higher, closed here, closed higher, indicates a reversal, and indeed the market reversed that downtrend. Up and coming educational events for the rest of March. This includes the following. On the 12th of March, I am doing episodics how I got to understand harmonic price patterns. Again, very technical analysis based, this one. I'll go a lot more in depth on this. That'll be a useful one to attend. Then, again, I'm going to go back to a little bit of psychology because I feel that so many educators sometimes they focus on the technicals, maybe the fundamentals. But one of the biggest battles, I think, is the psychology of trading, i.e. try to identify what type of person you are, what type of trading style suits your needs. Because at the end of the day, we're all different. And we all fit into different lifestyles. We have to feel like trading around our lifestyles, not us around the trading. So again, it's a bit of a personal journey as well. I'll share with you what sort of trading style I found suited my my character and my lifestyle. Then following on to that, again, something I feel very passionate about, which I feel helps all beginners and people beginning, or maybe people of those who've been in the industry for a while or trading for a while, but still find themselves still on the losing end. 26th of March, I'm doing an episode called How I Got to Know the Importance of a Trading Journal. So again, that will be a very interesting episode. So I do suggest, if you have the time, please come along. If you wish to speak to me, reach out to me. By all means, you can. This is my email address is james@strattonmarkets.com, or indeed you can follow me at Twitter. My personal Twitter account, which I do occasionally share market updates in my own comical, analytical way, which is @Trescothick. That's my handle. And by all means, if you follow me, you can indeed direct message me on that as well anytime you like. But like I say, contact me either on my email, james@strattonmarkets.com, or by all means, follow me and contact me on Twitter. My handle is @Trescothick. Before I move on to any questions, don't forget, I'll be talking about online trading and CFD trading. And like with all types of investments, it does indeed carry a great deal of risk. So I do suggest you do your own research and your own due diligence and know the risks at hand before entering any trade. With that out of the way, any questions at all? Anybody like to ask me anything related to this subject or maybe some other subjects? Any questions at all? If I have the answer, I by all means will share it with you. If not, I'll find out. Any questions? Let's try and put myself back on webcam so you can see me. So I can see myself. Can you see me? See my ugly face? Looking old, probably. Are there any questions at all? Anybody like to ask me anything? Michelle, you like to ask me anything? Demetrius? Any questions at all? Don't be shy. No? You sick of my voice already then? Okay, well, here's a question out to the room. Hopefully you found it insightful and enjoyable. Hope you did. Is there any topics in the future you'd like me to cover, maybe in the future, anything you want me to do? Because don't forget, I write these episodes, I put them together, and I present them really for the benefit of obviously helping your education, your understanding of this marketplace. Okay, so if there's any episodes you'd like me to put together and write and present, then please feel free to make suggestions. I have a question, Michelle, you're a star. This is a great question by Michelle. If I don't see any shooting stars or hammers or engulfing, how else can I detect reversal or entry points? Now, here's the thing. It's a great question, Michelle. Thank you. Look, just because, again, there are so many different factors into, and I know you like technical analysis. I know you do. Because I've had a delight to have a conversation with you, which was fantastic, and I enjoyed that. And I believe we're speaking tomorrow. Look, there is many different factors or different indicators you can use to try and identify if there is a reversal. Doesn't always have to be a shooting star or hammer or engulfing candle to represent reversal. There is other factors, other indicators you can use to detect reversals. Okay, such as, for example, channel lines, trend lines, moving average crossovers. There's other indicators you can use. So even if you don't see a shooting star or a bearish engulfing candle, doesn't mean that you're not going to see a reversal in a downtrend, in an uptrend, sorry. Same as if you don't see a hammer or inverted hammer or engulfing bullish candle, doesn't mean there isn't going to be a reversal of a downtrend. There's other indicators which you can use to upplay. So what I'm trying to say is just because there isn't a shooting star or just because there isn't an inverted hammer or a hammer doesn't mean that their trend is not going to change. Okay, there is other indicators you can use. Chart patterns are just one way or one method or one theory you can use to hopefully identify if indeed that pattern or that trend is about to change. So there is more than one way of doing that. Again, in many episodes, I'll cover the other methods and other indicators you can use to help you. I mean, in many ways, in some ways, some traders, for example, again, not advice, it's what some traders use. They use the moving average crossover and they don't act on it unless they see a particular candlestick pattern form, and then they act. So you can actually double up as well. But again, on other episodes of your training and other episodes I will do, I will include the other indicators. But a great question, Michelle. Thank you. Any other questions at all? My pleasure, Michelle. Absolute pleasure. Any other questions? Anybody else like to ask me anything else at all? Anybody else like to ask me anything else? No, Colin, you came in late, haven't you, my friend? Don't worry, you'll get the recording so you can watch it another time. Okay, going back to my original question I asked a little while ago. Is there any topics or areas you might want me to cover in the future? Any suggestions of topics? Maybe, like I said, One area so many people don't take the time to study sometimes is market sentiment, for example. I mean, for example, if I was to ask any of you individuals, you great individuals who've kindly taken the time out to join me tonight, if I was to ask you what the commitment of traders report is, would anybody be able to tell me what that is? Any idea what the commitment of traders report is? Anybody? Okay. But like I say, the reason why I bring up commitment of traders report is because sometimes market sentiment is an interesting topic to cover. And many people don't discuss that. They focus on technicals an awful lot. But market sentiment is important because obviously if the market is bullish or bearish, because don't forget the market is a battle between the bulls and the bears anyway. Are there more bulls in the market? Are there more bears in the market? It's the constant fight between the two, which can often be ascertained or read into by looking at market sentiment. So that's always a factor to take into account. So maybe I'll do one on sentiment and maybe the commitment of traders report, because I find that fascinating. I think it's a shame many people don't take the time out to understand that or use that, because it's free. It's out there. We'll work with it. Okay, if there's no other questions, what I will say is if you do feel about or do have questions you want to ask me later down the line, please feel free to contact me on my email address, which is obviously james@strattonmarkets.com. Or indeed, like I've already mentioned, follow me on my Twitter account, which is @Trescothick, where you can direct message me. If there's no other questions, and everybody's okay, can I just say a big thank you, Michelle, Demetrius, and Colin. And great question from Michelle as well. Thank you for that. I do love it when people ask me questions and people interact, because otherwise it gets quite lonely just me talking. So thank you for that great question. Great question, Michelle. So thank you again. So on that note, can I wish every single one of you either a good morning? Oh, hang on. Oh, thank you for your support, Demetrius. Oh, thank you, my friend. You're absolutely welcome. Thank you. Absolute welcome anytime at all. This is what I'm here for. So thank you for that. Very nice of you to say. Thank you. On that note, then, can I just say either a very good morning or good afternoon or even a good evening, depending on where you are around the world. Till next time, or indeed till next week, every single one of you have a fantastic day, and all of you trade safe.